Greetings, members, one and all of the Salivation Nation. Gold and silver rise, but not because of inflation. Let's explore. Gold and silver are a fickle couple. Indeed, how they react and why they go up or down. But we mostly know the reasons why it moves day to day. But in this particular case, we had some inflation numbers that came out, and it's not looking good, folks. But gold and silver, they didn't care one bit about that, at least not yet. I'm going to be referencing an article here from Jim Wyckoff over at Kitco News that talks a little bit about this. Gold and silver prices are posting moderate gains. That's right, only up slightly. In fact, here's what the numbers are right now as of the recording of this video. The markets are very close to closing. It will be closing very soon, and gold is up almost 0.8 of a percentage point, up $14.60. It's good to see a little bit of movement into the upside, although not that much. It is now $1,853.60. Silver has climbed up even more, which is encouraging news to see it move up almost 1.5%, 1.46%, up 31 cents. Now silver's comfortably above the $21 mark at $21.63 for the ask price. Platinum also had a pretty big day, up over 2.6, almost 2.7% now actually. Only palladium and rhodium have had negative territory, but that's it. The other metals have done fairly well today. But there's a reason for it, and it's not inflation right yet. That's right. This is because of a weaker U.S. dollar index and solid gains in crude oil prices. Another hot U.S. inflation report that is seen as problematic for consumers and the economy is a longer-term friendly scenario for the metals markets. And so that is something to keep in mind here, but it's not really weighing a whole lot on the price movement today. The U.S. data point of the week is the Consumer Price Index report for April came in at 8.3% year over year. The number was expected to come in at 8.1%, which means that we would have had peak inflation. And the Producer Price Index rose 8.5% from a year earlier. Inflation is running at a 40-year high, remains a main concern for traders and investors, along with the ongoing Russia-Ukraine war and the COVID lockdowns in China. Gold and silver prices did back down a bit from their moderate gains seen just before the CPI report was released. The data falls into the camp of the U.S. monetary policy hawks who want to see a more aggressive pace of U.S. interest rate increases from the Federal Reserve. However, veteran metals traders know that rising inflation is historically bullish for hard assets and bearish for paper assets. But the one thing that's makes this a bit more complex, especially for silver, is that it is also a commodity, an industrial commodity. Gold is an industrial commodity to some extent, but not nearly to the level that silver is. And so that is something that we're looking at here. Gold is a metal that is utilized but mostly treasured, which is why its price point is relatively more stable than silver. But these metals are reacting mainly to the U.S. dollar index and gains in crude oil prices. And that is what is bringing these metals up right now. The dollar index is usually always the biggest reactor to the prices. And that's what we're seeing now. And that is something that hopefully we'll see play out in the next couple of days or weeks. But inflation running hot here and people understanding what's happening with inflation. It's not transitory, and it is lower than it was in March, where it was 8.5%. But keep in mind that at that time, in March of last year, is when we really started to see inflation really kind of rear its ugly head. So even if we get, to the point where a year from now or a year from March 2023, if inflation is 4%, let's say, that's still 4% higher than the 8.5%. It just stacks on top of each other, which is never a good thing, folks. You won't see negative inflation go in the opposite direction unless we see a deflationary cycle, which is highly unlikely at this point for things to bottom out here. But inflation is a concern, and there's really concern about a recession that could be looming overhead because when you have the Federal Reserve raising rates at a point of a half a percentage point, that means that money is much less available to borrow at a good rate. In other words, you got to pay a higher percentage to borrow money and to borrow this currency, these dollars, which are losing value. So not only do you have to pay a higher interest rate, you're still paying on the inflation. The value of that dollar is dropping each time. And of course, adjustable interest rates mean it's more expensive to use capital to grow your business or what have you, or to stimulate the economy. And that's a real concern. And so therefore, that is going to be proven positive and a good thing for metals over the course of time. It's just that we have to be patient. I do seem to remember around the 2007, 2008 crisis and into 2009, silver was still relatively low. It really didn't react as many had thought it would at the time. And that's kind of really the time when we started to see more serious movement in the creation of the silver and precious metals community in general, silver and gold community here on YouTube. And people were predicting from that point all the way up to 2011 nothing but higher silver prices, especially. That was when the crash JP Morgan thing occurred. But this time, people are learning from that scenario and realizing that, hey, even though we're in really a bigger world of hurt in terms of our debt and deficit spending and where the country is going, even from back then, we know that we can't necessarily rely on the prognosticators that say that silver is going to go to the moon, or that the economy is going to collapse, or that the dollar is going to fail. They will not let the dollar fail, folks. If anything they want to prop up, it's going to be the dollar. And they have a trick up their sleeve. The Federal Reserve always talks about its toolbox. But what does it have in its toolbox right now? It's the wrench of higher rates. They turn that bolt up and bolt up those rates a half a percentage point. And that is going to put pressure on gold and silver in the short and medium term. That's the only tool they have. Other than just reversing direction and start quantitative easing again. They're in a mode of tightening here, but they can start doing that again, which is going to make things even worse. And think about it as a plane that goes up into a near stall, and then it recovers, and it takes a dive, it gains speed. And sooner or later, you keep doing that, and the plane's going to lose control and crash. But they have a safety net. Imagine a big old net underneath that plane, or it's a video game that can just reset it, reset the game. That's what they're going to be doing with the dollar, folks. The dollar that you see here will be reset or be revalued and recreated under this auspices of environmental, social, and governance, tied in with big businesses that are in cooperation with the government, and not just the government, but really around agencies around the whole world. This idea of this ESG, very scary situation where they'll be able to track these dollars under what's known as a central bank digital currency. That is our future, folks. And that means that given that the dollar is the cleanest shirt in the dirty laundry pile of wretched, dirty shirts out there, they can continue to do what they do with reckless abandon, so to speak, because they know they can always just reset the dollar and revalue it. And people will accept that and utilize it and welcome it. They'll welcome it with open arms. And people say, well, we'll just start using cash. But the thing is I've not heard this being talked about, but I very well could see the day where even cash will have a QR code on it that will be scanned at the checkout of all these agencies that will be able to track the use of this dollar bill what it was spent on, and where it was located, when it was spent, all but tying it directly and specifically to you. Whereas a central bank digital currency, and with ESG factors tied to it, those can be traced to you individually, which is pretty scary to think about. And that is the next step to a global system, much closer to a global system, and what some may even fear, the mark of the beast, to where that's a stepping stone into that direction, where we won't even need to have any cash. We'll just have everything digital and be tied to some sort of device that will be implanted, and you will be able to check out at the grocery store by just running your wrist across it. And they may tie it to some sort of wearable device at first, but that's inconvenient too. Why not just put a little something underneath the skin? Why not? For the convenience of being able to make a purchase. Who wants to carry this old watch or this old wristband or something like that? We need something that we'll never forget, because it'll be just under our skin. I know that seems like far-fetched idea, but I tell you what, you think about where things are going these days, it's not nearly as far-fetched as it would have been even 5 years ago. That's how quickly things are evolving, and the way our politicians are reacting, it's not a surprise how radical they are becoming. Literally, as I record this video, the Congress of the United States and the Senate chamber is literally considering infanticide, literally up to the point of birth. They want to codify the murder of babies all the way up to the 9 month. I don't know of anybody who is for that. I can't think of anybody who would be for something like that. It's absolutely ridiculous. But nonetheless, that's where we are at. And pray for our nation. That's all I can say. So there you have it. Let me know what your thoughts are in the comment section below. Gold and silver up, but not because of inflation. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.